Welcome to Lunch Money. Coming up, what to do about an interest-only mortgage crunch, how much has greedflation pushed up prices, and stick around to find out why the price of gold is on the up. Hello, I'm Simon Lambert. Joining me on today's Lunch Money is This Is Money's Helen Crane and Victoria Scholar from the show sponsor Interactive Investor. Helen, a major concern for some years in the mortgage market has been what's been dubbed an interest-only mortgage time bomb. We had an email from a reader this week that we answered. My interest-only mortgage is ending in a couple of months. I owe £79,000 and I don't have the funds to repay it. My house is worth approximately £155,000. I'd like to stay in my home. What options do I have? Now, this problem refers to a sizable chunk of borrowers like this who have interest-only mortgages and no means of repaying them. Can you talk us through the problems that this reader has?
So, as the name suggests, on an interest-only mortgage, you're not paying any of the balance of the mortgage down. So the amount you borrowed stays the same, you're just paying off the interest. Now, that can be fine for a short amount of time if you can then catch up on the repayments, but some people will have an interest-only mortgage for the whole term of their mortgage. And then that means that when they get to the end of the term, they still have to find a way to pay back the bank. So often, the idea is that these people will have something running alongside, like savings or investment vehicle, that they will use at the end to pay it off. But a lot of people don't. And if they don't, they get to the end of the term, then often the only solution is to sell the house in order to pay back the bank.
And we've seen this problem before with people's endowment policies that didn't quite meet the amount that they needed for their interest-only mortgage. But there was also a boom in the sale of these mortgages in the early 2000s, which then stopped with the credit crunch. How big is the problem for people?
Yeah, as you said, you're right. There's a lot of people who took these pre-credit crunch. It was a lot easier to get this kind of mortgage back then. It's not quite as easy now, but it is still very much possible. One of the issues that we're coming up against now is that obviously mortgage rates are much higher than they were a couple of years ago. So that means if people perhaps were on interest only, were looking to go on to repayment, they could be paying much more than they would have been had they done that a couple of years ago. Also, with costs generally being more high, it means that if you're on interest only, you might not have as much money in your monthly budget to build up those savings or those investments to pay it back at the end of the term. So it's a difficult time for people who are on interest only.
And obviously it depends on the length of the mortgage and the amount of the mortgage, but put a sort of figure on it. How much could this end up costing people if they need to move from interest only to repayment mortgage?
Yeah, I mean, it could easily be, if you don't have very long left on the term and if your mortgage is quite big, it could easily be £1,000 a month, and that's on a fairly sort of average size mortgage. So yeah, it can be a big problem.
And what can people do if they just can't afford that £1,000 a month? Is there any other options?
Yeah, there are other things you can do. So in the article, our expert David Hollingworth talked us through some of those. You can extend the mortgage term is one thing that you can do. So that gives you a bit more time to maybe sort out your options and start making repayments. You could consider perhaps selling and downsizing. You might be able to buy somewhere where you could start off on a repayment mortgage and kind of get out of that interest-only trap. Other options, there's a retirement interest-only mortgage if you're nearing retirement, and that basically means that you can continue on that interest-only path, but you agree that the home will be sold to pay it back upon your death. So there are options. I think the real key thing is if you are on interest-only and you're worried about making repayments, talk to your lender as soon as you can. Don't kind of bury your head in the sand. So one thing that people come up against is they'll switch to interest-only, maybe just for a small amount of time to bring their payments down. Maybe at the moment their rate's gone up and they just want a bit of breathing space, but then they end up not going back to repayment, and that's when people get really stuck. So I think the key thing is to have a plan, don't bury your head in the sand, keep in sort of communication with your lender, and know what you're doing with it.
And that's actually one of the options people have been given recently, isn't it, with mortgage rates spiking, is to shift to interest only. Are we setting ourselves up for another problem coming down the line?
Quite possibly. Highly mortgaged people who do that, it is in just a few years you can really get behind on your mortgage, and you might find that you have to put the payments up quite significantly when you do go back. So definitely to be used as a short-term fix, I think, is the warning to borrowers.
Now, the reason why those interest rates have been going up that we were just talking about is down to inflation and the Bank of England trying to get a handle on it. There has been a suspicion for some time that some consumer brands makers have been pushing up prices by a bit more than they need to, something that's been dubbed greedflation and even led to an argument between some of the consumer brand companies and the supermarkets. The CMA seems to have found evidence that this is happening. What did they tell us?
Yeah, absolutely. So this is a report from the CMA this week, and they've basically accused food brands of profiteering during the inflation crisis of the last 2 years. So they've said that they've put up prices over and above the amount that their own manufacturing costs have gone up for no reason other than to make more money. It's something we've all noticed in the supermarkets. But the CMA has said brands are on the hook for this. Rather, some people sort of blamed it on supermarkets, but they're laying at least some of the blame at the door of food manufacturers.
What are some of the products that they've seen this with?
So common ones are things like, things we buy all the time, so baked beans, baby formula, those real sort of basics, pet food, so everyday kind of purchases. And they're saying that 3/4 of branded suppliers have put up their prices in this way, kind of over and above their own costs. So it's quite a serious issue.
Insert your own stealing milk from babies joke there, viewers. They also said something else, which was a separate issue, but it came out at the same time, which was to do with the supermarkets and the loyalty pricing schemes that we're seeing more of. What's that they're talking about?
Yeah, so this is the offers you see in the supermarket now when there's one price for regular customers who aren't signed up to a loyalty card scheme, but then there's another cheaper price for people who have the loyalty card. We've seen more and more of this, especially since the cost of food has gone up. And the CMA has said it's concerned about the impact that's having on competition and on customers, so it's planning to do a review into whether the supermarkets are playing fair on that.
So the Nectar prices, the club card prices, the really annoying things when you're in the shop.
Yeah, exactly.
Thank you, Helen. Victoria, inflation may be falling now, but the price of gold has been on the rise recently. What's happened here?
Yeah, you're right. We've been seeing that gold has been climbing. It's been rallying from the trough we saw at the start of October. And this year it's up about 12%, hitting 6-month highs just this week. We've seen that there's been quite strong demand for the precious metal. It's been driven by expectations that the Federal Reserve is pretty much done in terms of rate hikes this year, which has been putting pressure on bond yields and the US dollar, which makes it more attractive when priced in dollars. On top of that, we know that investors are looking for safe havens given the global economic slowdown, particularly in key economies.
And do we think that the price of gold will continue to rise?
I think there's a potential for gold to continue its upward trajectory, given that inflation is still above target in a number of countries like the US and the UK. And so gold is obviously a tangible asset which would arguably retain its purchasing power as a hedge against inflation. Plus, of course, with the rising risk of recession in key countries, investors are looking for ways to preserve their wealth. So they've been flocking to safety assets like gold and silver. And if we continue to see a cloudy economic outlook, then we could continue to see demand for gold.
Thank you. And finally, they were written off during the pandemic, but airlines are bouncing back. We had some results from EasyJet this week. What did it say, and where is it back to making money?
Well, it saw that its 2023 earnings before interest and tax came in ahead of expectations and swinging from a loss in the previous year. We also saw that passenger revenue outpaced expectations and grew quite sharply versus 2022. It enjoyed a really strong summer performance thanks to robust travel, and it issued a rosy outlook for bookings next year and said that supply constraints in Europe will help support its performance in 2024 too. But there are some concerns looking ahead. There are headwinds to contend with, like higher jet fuel prices, although it has hedged out a lot of that risk. And then, of course, there's the weak consumer backdrop and the war in Ukraine. It's already said that flight pauses in Israel and Jordan are expected to impact its results in the first quarter.
And the airlines have something that they like to refer to as ancillary revenues. These are the things where they charge us more for booking a seat, taking a bag, doing the basic stuff that you might want to do on a plane. Is EasyJet making more money from that kind of stuff as well?
Yeah, I think so. You know, this has been a really big theme in terms of the airlines and the shift towards no frills services in recent years. But the effect on its customers has been that you have to pay more for all of these extra things, like even taking a bag or speedy boarding and plenty more services. So this tends to be a good way for EasyJet and its rivals to make extra cash.
Thank you, Victoria. That's all for today's Lunch Money. Thank you for watching. You can watch more episodes at thisismoney.co.uk/lunchmoney or search for This Is Money on YouTube. And if you're watching us there, please remember to like and subscribe. And don't forget to join us for the next show on Tuesday. Goodbye.